Hello, welcome back to Learn Oikonomia. Today we are going to answer the question, is deficit financing a hidden tax or not? Let's answer this in today's session. So first of all, I would like to make you understand the idea and concept of deficit financing. Then we will try to answer the question whether it is a hidden tax or not. So what is deficit financing here means that it would be a kind of expenditure made by the government, but this expenditure is not made out of the receipts of the government. It is not made out of the revenue of the government, but instead the government would be going for borrowing. So mainly as far as the welfare government is concerned, when it compares its expenditure and revenue, the expenditure would be more. And we are dealing with something called a deficit situation. And to meet this deficit situation, in order to meet the increased need to spend for the different needs and wants of the public, when the government sees that its revenue is not sufficiently enough to meet its increased expenditure, what the government usually do is that it will go for borrowing. So this borrowing makes the government to have some money with it, and this makes the government to increase its spending. So increase in borrowing means the government will be having more money in its hand. Even though it's a borrowed money, it shows some extra money with government. This makes the government to increase spending. So what would be the effect of the very same here? That is what we are going to discuss here. This is something that will lead to something called inflation, because when the government increases expenditure, increasing government expenditure means government would spend for various needs and wants of the public. It will be increasing the pensions of people, it will be increasing unemployment allowances, it will be increasing subsidies, it will be increasing other types of allowances given to people. So this is how the government increases expenditure. We are talking about government expenditure, not people's expenditure. So this makes increased flow of money from government to people. Now people would be having more money with them, and this will make them to go for an increase in their demand for goods and services. So their demand would be increasing. We are talking about a situation when the demand increase all of a sudden. So the demand would be more than supply. Because supply cannot be increased all of a sudden, it would take some time for supply to get increased. So at least for some time, this would be the situation. What would happen when demand increases? We are dealing with the situation of demand pull inflation. So inflation would be there. Price of the commodities would be increasing, so leading to inflation. And for the very same reason, we could see that as a result of deficit financing, there won't be a tax. It is not acting as a tax, but instead, government is trying some way to finance its activities without increasing taxes or without going for a new tax. But instead of creating a new tax, when the government go for deficit spending, it will lead to inflation. And what would be the implications of the very same here? Let's see it. I told you that it will lead to inflation, but this would be acting as a hidden tax. How? Because when price of the commodities increases, it just implies that the purchasing power of people is coming down. Purchasing power is coming down because the value of money is coming down. Earlier, with something like 100 rupees, we are talking about earlier situation. Earlier with rupees 100 you could purchase something like 6 kg. But now as a result of inflation, with the same 100 rupees you could purchase something like 4 kg. So there exists a 2 kg difference because the price of the commodities has gone up. By giving the same price, you would be getting less. And the value of money is coming down here. And in that sense, you can consider deficit financing as a hidden tax, because it is reducing the value of people's savings, people's income. Even though you're getting so much of money in your hand, that won't be sufficient for you to spend for your daily needs and wants, because for everything the price would be very high. that would be creating problems for the people. So in that sense, it is acting as a problem, it is acting as an issue, it is acting as a hidden tax. And let's consider some other side. We can consider the role of monetary policy by the central bank of the economy. As a result of inflation, the central bank would be taking its own measure to deal with curtailing of the interest rate, curtailing of the inflation level in the economy. So how would be a central bank doing here? As far as interest rate is concerned, the central bank would be increasing the interest rate. So the interest rate for loans would be increasing. And when interest rate for loans increases, it shows that loans would become more expensive. And what would happen when loans become more expensive? This would compel the businessman to go for reduced investment. So the investment would be coming down, because nobody would like to take loans for a huge interest rate and to go for investment. So this will demotivate the investment activities in the economy. And what will happen? When investment comes down, growth will also be coming down. So altogether, we can say that while deficit financing is not acting as a tax, it will be having some economic consequences. Again, this is having some negative economic consequences, and this could be in that sense seen as a form of taxation. And that is why you can say that in that sense, it is, deficit financing is acting as a hidden tax. That's all. Hope you understand how we are establishing the relationship here as far as deficit financing is concerned. I request you to like, share, and subscribe to this channel for more videos. You can also join our free Telegram community by clicking on to the link given in the description box. Also, you can download the Learn Economy app, for which also I'll be providing the link in the description box. That's it. Thank you for watching.